Hey guys, it's Andrew Keen from KeenOnTheMarket.com. This is the second half of the trading day when I go over all the earnings trades. I've gone over all the earnings trades so far. I have two more I still want to go over. I use the HIM Cribbit trading plan for everything, and I'm going to use this right now. The HIM Cribbit trading plan looks at historical movement, implied movement, measured move targets, and I base a trade off how the stock has moved over the last 8 quarters. The next one I'm going to look at is I see Herbalife moving higher here. I do have a put fly on, and that is going to be Best Buy, BBY. And there's no way possibly in my right mind I could get long Best Buy for earnings. It's inconceivable, not possible. I don't care if the stock goes up. I cannot get long BBY for earnings. So let's go through the HIM Cribbit trading plan. In BBY on earnings, stock is currently trading at 1634. So this was an OVTI. I have not got filled in OVTI, BBY. Let me capitalize that so it looks nicer. So BBY for earnings. Over the last 8 quarters, the stock has sold off 13%, sold off 1.4%, up 1.6, down 6.9, down 15.5, down 6.5, up 4.5, and down 5.4. Is there a common trend that I see here? Well, the stock has sold off 6 of the last 8 quarters on earnings. The at-the-money straddle, at-the-money call, at-the-money put. So the 16 straddle is currently priced at $1.60. So they're implying a 10% move in BBY. We have 2 measured move targets, one to the upside and one to the downside. Upside measure move target 16 plus that $1.60 gives me $17.60. Downside measure move target 16 minus $1.60 gives me $14.40. Let's look at the chart real quick. If I had to look at the chart in the chart only, is there a better chance the stock rallies or sells off? Well, here's the thing. We got up to this $18 level. The last couple days look weak. We have huge tails right here. The stock looks decently strong, but knowing the fact that the stock has sold off 6 of 8 quarters, I cannot rationalize a bullish trade. It has rallied. I think it's one of these things that I thought HPQ was going to go lower. I was wrong. You know, I lost some money in there. I think Best Buy is headed lower as well. So what kind of trade would I want to put on? Okay, so the chart looks decent to the long. I can just not rationalize a bullish trade in Best Buy. I can just not do it. So when I bring up my option montage here, so I want to look at a possible trade idea. Okay, I just want to buy like a put spread for like 35 cents or maybe 40 cents. Risk 40 to make 60. So this is BBY. So the first thing I look at is I'm going to look at 2 things. I want to look at selling a call spread, and then I want to look at buying a put spread. So in BBY for earnings, stock is currently trading at 1640. The 16, see there's half strikes in here. The 16-17 call spread is around 38 cents. I don't want to do that one. I like buying the 16-15 put spread. I like buying the 16-15 bear put spread. I can put this on for about 32 cents, risk 32 to make 68. So I think this is a good reward to risk setup, and my measured move target is to the downside at around this $15 level. This is buying premium though, so if the stock doesn't move, I will lose money on this trade. So this is the one that expires tomorrow. I'm buying the 16 puts to sell the 15 puts. So this is the 16-15 bear put spread in BBY for earnings. This is the 16-15 bear put spread in BBY for earnings. The market on the screen, $29.32. I'm going to pay a penny above mid-market, and most likely I will get filled. So this is interesting here. Watch this. 29.37. 29.37. I'm going to pay 34, and I will get filled. So I'm buying some for 34 cents right now, and I just got filled. So I just got, oh, I got partial fill. So I'm in this trade at 34 cents. I got a partial fill at 34 cents. So my trade is buying the BBY March 16-15 bear put spread for 34 cents. On this trade, I'd be buying the March 16 put to sell March 15 put. Okay, so this is a bear put spread. This is a bear put spread. If you guys want to help me here, the best way to learn is to participate. What is the risk, the reward, and the break even? Very good. So my risk on this trade is $34 per one lot. My reward on this trade is $66 per one lot. So it's probably giving me 68 would be 2 to 1. So it's giving me almost a 2 to 1 reward to risk setup. Okay, it's giving me almost a 2 to 1 reward to risk setup. My break even to the downside is 15.68. It's March weeklies. This is the weekly option in Best Buy. And I think the stock moves lower. Okay, I did get filled in this trade. I am in this trade. All my earnings trades have been a little lighter than normal. I've been trading unusual option activity really well, but I haven't been trading the earnings as well. So let me go to my notes. So this is my 6th trade today. So entry. I bought the BBY March 16-15 bear put spread for 34 cents. Okay, so I am in this trade in BBY. I bought a bear put spread for 34 cents. I have to update this later, but I'm in this trade in BBY. Does anybody have any questions about this trade at all? Does anybody have any questions about this trade? BBY, I'm buying a bear put spread, buying the 16 put to sell the 15 put. A $1 put spread can be worth $1. If I buy it for 34 cents, my risk is $34 per one lot. My reward is $66 per one lot, which gives me almost a 2 to 1 reward to risk setup. So I was at the money show in Chicago once. Someone asked me a percentage of my trades that are winners. I looked them in the eye and I said, it doesn't matter, right? It doesn't matter my percentage as long, if I am 50-50, but every time I win, I'm getting 2 to 1, 3 to 1, 4 to 1, and every time I lose, I'm just losing one unit. It doesn't matter my percentage. I just want to be profitable, okay? I just want to be profitable. Like I said, this year I'm up about 17%. We emailed the spreadsheet of every trade I have put on for the trading room to everybody in the trading room. Every customer gets that. And I can email it to anybody if they want to see it. So last chance if you guys have any questions. If not, I will save this. When I looked at it, the stock might have moved a little bit. The measured move target might be $1.45. It matters if you use the at the money straddle or the strangle. Well, that's good because I'm selling the measured move target. I'm selling the measured move target. So if you had $1.40, the 1640 minus $1.40 would put the stock right at 15, right? Does anybody have any questions about this trade? Okay, I will save this for you guys. And I'm going to talk about 4 ways to play CRM. And I did this the other day in Priceline. And I talked about in Priceline, I would have done a condor, and I couldn't bring up my spread book. So this is saved in documents on the bottom right. You can pull up anything you want. This is great review or the way to study. Last one for earnings is going to be CRM. So CRM is currently trading at $168.98. 168.98. And the stock is one of these stocks that has performed very well on earnings. Okay? Stock has performed very well on earnings. Over the last 8 quarters, the stock is up 8.8%, down 1.2%, up 8.8%, up 9%, down 10%, down 2.7%, up 8%, and up 3.4%. So this is CRM, and this one's going to change. I'm going to call this one 4 ways to play. What are 4 ways to play the stock for earnings? So let me bring this up a little bit more. Okay. Next thing I'm going to look at is the implied movement. What is the option markets implying the stock will move on earnings? How much are they implying the stock is going to move on earnings? So the at the money 170 straddle, and these are weekly options, is priced at $12.30. So this is $12.30. I'm always going to have 2 quote-unquote measured move targets based on the at the money straddle. So measured move target to the upside is the 170 plus 1230, puts the stock at 172.30. So I'm sorry, 182.30. Downside measured move target is 170 minus 1230, puts the stock at 157.70. How does the chart look? I'm assuming the chart looks pretty bullish, right? So let's look at the chart real quick. CRM. So it is now into the Ichimoku cloud. Okay, it is into the Ichimoku cloud, which is technically neutral territory. Had that blow off top up here. It has sold off a little bit. This is in the cloud computing space. Let's see who their competition is. CRM. We did have Riverbed. I don't know if Riverbed's direct competition. So let me look at this real quick. So CRM, I want to see who their competition is. Competition, Oracle, SAP. SAP got a pop on earnings. Oracle didn't really move at all. They're in the cloud computing space, and they performed pretty well on earnings. So the chart, is long-term bullish. Short-term neutral. So I'm going to talk about 4 different ways I could play CRM. Okay, one's going to be buying movement, one's going to be selling movement, one's going to be bullish, and one's going to be bearish. Stock has rallied 6 of 8 quarters on earnings. Stock has rallied 6 of 8 quarters. Okay, so the first one is going to be buying movement. So if I just said to myself, hey, you know what? I think CRM is going to move more than 12 bucks. I just want to place a bet that CRM will move more than 12 bucks. What would I do? Well, I could just buy the weekly 170 at the money straddle for $12. Okay, I would buy an at the money straddle for $12. My risk on this trade on a one lot would be $1,200 per one lot. My reward on this trade, in theory, would be unlimited. My reward would be unlimited. I always have 2 break-evens on a straddle. My break-evens on the straddle are 158 and 182. So if I just wanted to buy the movement, I would just buy the at-the-money straddle. Number 2, if I wanted to sell the movement, okay? If I wanted to sell the movement, what would I do? Sorry about that. I want to sell the movement. If I said, hey, you know what? I really don't think the stock's going to move this much. I think it's going to move way, way less than that. So I would sell a call spread and a put spread outside of the measured move targets. So let me bring this up in CRM. CRM. I always want to use the weekly options. If I said to myself, hey, you know what? I don't think the stock's going to move that much. I don't think it's going to move more than $12, okay? What can I do knowing that I don't think it's going to move more than $12? Okay, so in CRM, I just bring this up. Option chain, option spread. So option chain, option spread. And what I would do here is I would sell the 160, 155 put spread. So I would sell the 160s to buy the 155s. And then I'd also sell the 180s to buy the 185s. Okay, so this is a iron condor. So I would sell a bull put spread outside of the measure move target, and I would sell a bear call spread outside of the measure move target. I hit add, I hit OK. And if I looked at the price of this, this would be right around, I'm going to do a one lot of these for $2.06. I'm going to offer it at $2, how about $2.07? So I'm offering this in the spread book currently right now at $2.07. Okay, so this will be my trade. So if I wanted to sell the movement, I could sell the 160, 155 bull put spread and also sell the 180, 185 bear call spread. Okay, this is known as an iron condor, and I did just get filled in this spread. This is an iron condor for earnings. Selling a call spread, selling a put spread. I have to speed this up a little bit because we only have a couple minutes here. So my risk on this trade, I could do this for $2.07. My risk on this trade would be $293. My reward on this trade is $207. And I did get filled on this trade. And then my break even, I'm going to have 2 break evens of this trade, is 182.07 and also 157.93. So I make money anywhere in the range. If I didn't think if I just thought the stock was going to go right to 175, that would be a great candidate. If I thought the stock was going to go to 175, call counters, great candidates. If I thought the stock was going to go to 175. So you always want it to end up on your short strike. If I was bullish, okay, if I was bullish and if I was bearish, okay, the stock really has never sold off that much on earnings. Last time I noticed that the stock didn't move that much, and then it just took off to the races. So if I was bullish, I would actually just sell a put spread right here. I would sell the 70.65 put spread. I could get 2.25 for that. So if I was bullish, I would just sell the weekly 170, 165 bull put spread. I sold them. I sold the call spread and I sold the put spread. So I sold this. I could get one. Let me see the price of this real quick. For this put spread, I could get about 2.25 for it. So if I was bullish, I'd do this for 2.25. I would sell a bull put spread. My risk on this trade is 275 per one lot. My reward on this trade is the 225. And then I have one break even on this trade. This is what I would do if I was bullish. Last trade, if I was bearish, okay? My trade is number 2. This is my trade right here. If I was bearish, okay, I would want to get a great risk versus reward. If I thought the measure move target was 155, I would be buying, okay? I would buy the weekly 165, 155 bear put spread. If the stock gets crushed, it's probably going to get hit really, really hard. So this is a $10 put spread. This is a $10 put spread. I would look right now, it's priced at about 280, okay? So if I was bearish, I could buy this for 280. On this trade, my risk would be $280 per one lot. My reward would be $720 per one lot. Thinking that if this stock goes down, it's going to get hit hard because it's ran up so much and it has a really extremely high PE. So if it does get hit, it gets hit hard. So this is my break even if I was going to do this trade. So this is 4 ways to trade CRM. 4 ways to trade CRM for earnings. Okay. And I will save this. If you guys want to tell me a stock beforehand, I can make time for it. But since no one told me about it, what I will do for you is I will give you all this information for ISRG. Do they have earnings tonight? ISRG. I don't see ISRG. Oh, the stock's down $41. So I got filled on the Condor. I'm in this Condor, so this is a new trade in CRM. So CRM entry. I sold the CRM weekly 160, 155 put spread and 180, 185 call spread for 207. So this is a new trade. They always say nothing's a one-day event. Nothing is a one-day event. So ISRG, most likely is going to go lower. I'm looking at the chart. So this is your earnings trades. That's your earnings trades. I go over all the earnings trades at 1:30. The trading room is open for over 4 hours of live audio and video streaming per day with all trades, real-time, real money, transparency. And I'm up 17% year-to-date this year and 40% since inception in June. Thanks, guys, and I'll see everybody in the live trading room soon.